Okay, good morning everybody. We're about to kick off today's webinar, so thanks for bearing with us just for the few people that were still logging on. So you're very welcome to today's webinar. This webinar is specifically designed for payroll bureaus, accountants and bookkeepers who have payroll clients. So we'll have two topics today. Our first speaker today is Paul Byrne. And Paul is the director here at BrightPay and is also a chartered accountant. Paul had his own practice for about 20 years where he had a lot of payroll clients, so he knows what it's like on the front line. Today, Paul will be discussing essential questions to ask your payroll provider to make sure you're covered for automatic enrolment. Our second speaker today, I'm delighted to welcome Griselda Williams from Smart Pension. Griselda is a financial professional with 15 years experience, and she is the Business Development Director for Smart Pension's Auto Enrolment Pension Scheme. Today, Griselda will aim to show you how to navigate this automatic enrolment jungle to help you on your journey to choosing a scheme that is going to support your automatic enrolment compliance duties. Now, you're quite welcome to type in any questions that you have throughout the webinar. So on your control panel on the right-hand side, there's a little question tab. So please feel free to type in any questions that you may have at the, throughout the duration of the webinar. And at the end, we'll have a Q&A session with both presenters. Today we have a free competition for a BrightPay Bureau license, and this competition is open to everybody who stays for the duration of the webinar. So you'll automatically be entered into the competition once you stay. And we have two Bureau licenses to give away today. We also will record today's webinar, and we'll send you on a copy of the link and the recording after today's webinar, so you can have a look at it at a later date, or you can forward it to any colleagues. So I'll now like to pass you over to Paul, and enjoy everybody. Thank you.
Okay. Hi everyone, and thank you for joining us today. Just a small bit about myself to start off. As Karen said, my background is as a practicing accountant. I started my own practice back in the 80s and eventually grew to a 3-partner practice with 10 staff. So while in practice, I provided payroll bureau service for about 30 clients. So as Karen said, I have some idea what it was like in the front line. Way back in 1992, I got into payroll software development. A large part of my reasoning for this was to make better software than what I was using at the time. Eventually, I began working in software development full-time. 4 years ago, we introduced BrightPay and Bright Contracts in both the UK and Ireland. However, I can't claim full credit for BrightPay as it is written by someone younger and better than my fellow director, Ross Webster. Today, over 80,000 employers across the UK and Ireland use our products, and it's a figure that we are improving on every year, thankfully. So here's the agenda for my slot today, which I hope you'll find useful and give you plenty of food for thought. When talking, I will probably often refer to auto-enrolment or automatic enrolment simply as AE. And for those of you who have tuned into any of our previous webinars, apologies if I end up repeating some of the points previously made. Unfortunately, this is unavoidable. Okay, so the most basic function required in a payroll software package is the ability to assess employees in a quick and efficient manner. Once an employer reaches their staging date, the workforce must be assessed to determine which employers are eligible job holders, non-eligible job holders, or entitled workers. You must know who needs to be automatically enrolled into a workplace pension scheme. So what are eligible job holders? They're those who are aged between 22 and state pension age. They earn more than £10,000 per annum, which is the earnings threshold currently, and they work in the UK. These eligible job holders must be automatically enrolled into a workplace pension. All other employees are either non-eligible job holders or entitled workers, and they can choose to join the workplace pension scheme. Even if there are no eligible job holders for enrolling automatically, you must still determine the employee's worker category, as different responsibilities are required as per the worker category. Even after the staging date, employees must be monitored at each pay period in case an employee becomes an eligible job holder, meaning they need to be automatically enrolled. So in summary, auto-enrollment is something that is optional for the employee but mandatory for the employer. So assessing each employee's age and earnings manually at each pay period would be extremely time-consuming and monotonous. A key feature to look for in payroll software is the ability to assess employees automatically and notify you when you have AE duties to perform. This will be especially relevant after staging when it comes to the ongoing duties. The payroll software should be able to assess employees automatically and notify you if an employee becomes eligible without the need for user intervention. When an employee requires enrollment, it is important that your payroll software can enroll employees quickly and seamlessly. If you have a number of clients with many employees, an ideal feature is batch enrollment to allow you to process multiple employees at the same time, saving you time and effort. An employer can choose to postpone automatic enrolment for up to 3 months for some or all employees. Postponement is an employer responsibility. The key reasons for postponement are avoiding enrolling employees who have a temporary rise in earnings, aligning assessment dates with pay reference periods, or allowing for contractual joiners, people who might be only staying for less than 3 months. Apparently, some employers believe that if they choose to postpone all employees for 3 months at the staging date, then nothing needs to be done in that 3-month period. This is not the case, as all employees must receive communications within 6 weeks of the staging date relating to the postponement and explaining when they will be reassessed. If this communication is not issued, then the postponement effectively never happened, and enrolment must be completed retrospectively back to the staging date, which will in itself be a nightmare. On the last day of the postponement period, you'll need to know whether any member of staff whose automatic enrolment you postponed is still eligible to be automatically enrolled. If they are, you must put them into a pension scheme straight away. You cannot apply a further period of postponement even if you postpone for less than the 3 months allowed. It is vital that your payroll software can handle postponement. Employers should be able to postpone one, multiple, or all employees and should have the option to choose any deferral date within 3 months of the staging date. Once the deferral date is reached, the software should notify you that employees have been reassessed so that you can enroll any eligible job holders. A bonus is when the software can handle the additional communications required due to postponement. A core feature of auto-enrollment is the ability of employees to opt out, and this decision must be taken freely by the employee. Employees cannot opt out before the opt-out period starts or after it ends. The opt-out period is 1 month from when active membership is created, or from when they receive your letter with the enrollment information, whichever is the latest. If an employee decides to leave the scheme outside of this period, they will instead be ceasing active membership. If any of your employees choose to opt out within the opt-out period, you need to stop deductions of contributions and arrange a full refund of what has been paid to date. Usually the refund will be processed in the next payroll after you get the opt-out notice. If they decide to opt out after the end of the opt-out period, whether they get a refund of contributions will depend on the individual pension scheme rules. You must make sure that your payroll software is able to process opt-out requests and refund any contributions made to the employee. Employee communications is an important employer responsibility and is often considered the most challenging part of the process. You must write to all employees after your staging date, not just those who have been enrolled, and explain how auto-enrollment applies to them and explain their rights. This must be done in writing and within 6 weeks of your staging date. Varying information is required depending on the employee's worker category. It is the employer's responsibility to ensure that the right person gets the right information at the right time. You must notify eligible job holders that they have been enrolled into a pension scheme and that contributions will be deducted from their pay. You must provide details of the pension scheme you've chosen for them, along with the contribution amounts and how they will increase over time to meet the minimum contribution rates. You must also notify them of the right to opt out of the pension scheme if they wish to do so, and details of how they can do this. You must write to staff who have a right to opt into an automatic enrolment pension scheme, otherwise known as non-eligible job holders, explaining how automatic enrolment applies to them. You must also write to staff who have a right to join a pension scheme, known as entitled workers, explaining how automatic enrolment applies to them. When postponement is used, additional communication duties come into play. It is up to the employer to notify these eligible job holders that they are using a deferral period. The postponement communication will let your staff know that they will be enrolled on a particular date if they meet the relevant criteria. And again, as I said before, it is often forgotten that a postponement communication must be sent to all of your staff within 6 weeks of the staging date. And as communication is not sent within the required time frame, then the postponement is effectively null and void. A useful tip is to send the employee communications around the same time as you are submitting your pension file. If you send the communications too early and the employees contact the scheme to opt out, the scheme will have no record of the employees and therefore will not be in a position to process their opt-out requests. Not all payroll software providers are handling AE communications. In my opinion, it is just as important as all of the other auto-enrollment features. Ensure that your chosen payroll software can produce the required employee communications for you and make your job much easier. Good payroll software will easily produce interactive and personalized letters to provide your clients with the relevant communications for their workers based on each employee's individual eligibility. Some of the pension schemes prefer to handle some or all of the communications. Your payroll software should allow you to turn off communications reminders in such cases. Another useful feature that you should ask your payroll software provider about is keeping records and reporting. You must keep records of how you have complied with your automatic enrolment duties, including records about job holders and workers, for example, name, national insurance number, date of birth. These are all maintained by the payroll software. Gross qualifying earnings in each pay period, the contributions payable in each pay period by an employer to the scheme, and the amounts payable by the employee. This includes contributions due from the employer and deductions made from earnings. The date contributions were paid to the pension scheme. All of this, again, is maintained by the payroll software, or should be maintained. Any opt-in, joining, or opt-out notices, keep them on file, either hard copy or scanned copy. Copies of any postponement notices should also be kept. Records about the pension scheme, for example, employer pension scheme reference and scheme name and address. You must keep these records for 6 years and the opt-out notices for 4 years. Employers can use their existing business documentation, for example payroll records, for the purpose of collecting and storing records, but should note that the notices, an opt-in notice, joining notice or opt-out notice, must be retained in the original format, as this is proof of an individual exercising a right. Copies of the original format or electronically stored versions are acceptable. However, all records must be kept in such a form and manner that they are legible or can be provided to the regulator in a legible format. Employers who outsource business or pensions administration to a third party can continue to do so. They may authorize the third party to keep, preserve, or provide the records on their behalf. However, it remains an employer's legal responsibility to ensure that these records are kept and, if requested, to produce them. It is important to ask your payroll software provider about reporting. This is a useful way to access historical data for record-keeping purposes. Some payroll software packages allow flexible reporting, which is a very useful feature. For example, BrightPay has a report writer, which allows you to customize the information you want to see, allowing full flexibility. Integration with AE pension providers will also be a key consideration to think about when weighing up the various payroll solutions out there. It is critical that your payroll software is integrated with your chosen pension provider. Each pension provider requires contribution files in different formats, and so choosing the payroll software that caters for your chosen pension provider will avoid complications that this may cause. If you're using Nest as your pension provider, choose a payroll software provider that includes Nest integration, allowing you to submit enrollment and contribution files directly to Nest. This eliminates the need to save files to your computer, log into Nest and upload these files manually, reducing the time and workload required each pay period. In BrightPay, this will work very similarly to RTI, where the submission is made directly from the payroll software. If you are changing your payroll software provider, beware of hidden costs that they may charge. With some payroll software providers, you may have to pay additional costs for AE functionality, support, and additional employees. Make sure you know of any additional costs that you may be faced with throughout the year. Payroll software will play a key role in ensuring the success of auto-enrolment. Without appropriate payroll software in place, bureaus will need additional time and resources to cope with auto-enrolment. The pensions regulator recommends that employers and bureaus choose payroll software which is specifically tailored to auto-enrolment and will correctly perform tasks. It is important to check with your payroll software provider to establish how it handles automatic enrolment, and you should test it well ahead of your staging date to make sure it works. This will allow you to streamline AE processes and increase the profitability of your payroll business. So now it's time for my shameless plug. BrightPay is an integrated payroll and automatic enrolment software solution which allows you to streamline auto-enrolment tasks, saving you both time and money. The software has been designed to take all of the grunt work out of AE and makes the AE process effortless and uncomplicated for small business owners and bureaus alike. So I would now like to hand you over to Rachel for a quick demo showing you just how easy auto-enrolment can be with BrightPay. In this example, we are assuming that the employer, or you on their behalf, has already registered with a pension provider, in this case Nest. I should also state here that our plans are to include a Smart Pension API in our software so that you can submit pension information to Smart Pension in the same manner shown here for Nest. So thank you, Rachel.
Thanks, Paul. Okay, so today we're going to have a look at a company set up in BrightPay who are set to stage on the 1st of January 2016 and who are using Nest as their auto-enrolment pension provider. So as soon as your staging date is known, this must be entered in the Pensions tab and in the designated field provided. This is to make sure that the on-screen auto-enrolment alerts start up at the right time for you. Adding a pension scheme is also straightforward and can be done in advance of your staging date. Click Add New Scheme and choose the relevant pension provider from the listing. So currently BrightPay handles 14 different pension providers. However, if you want to use another pension provider that's not on the list, such as Smart Pension, you can use the other Automatic Enrolment scheme. So today we're going to use Nest, and you must now enter your employer reference, and you'll receive this when you're setting up your pension scheme with Nest. And now you have to choose your submission method. So the CSV file upload is where you manually save the files to your computer and upload them to Nest web portal. However, the Nest web services, the API that Paul mentioned earlier, that is direct integration between BrightPay and Nest. So now enter my user ID and password. And click. And in the following tab, if you enter a group name, so I'll just say monthly here. Okay, so you now have to choose your contribution type and your earnings basis, or you can also have the option to add additional groups if required. For example, if you have employees on different pay schedules. So click Save there and you'll see the Nest options appear at the top. Another option at the top here is the assessment report, and essentially this will give you a snapshot or a preview of what auto-enrolment might look like when you reach your staging date. So it gives an overview of the worker categories, the qualifying earnings, the employee and employer contribution rates, and this document also has an assessment guide with general information about auto-enrolment. So this document is useful to send to clients maybe 6 months in advance of their staging date, just so they can see how much auto-enrolment might cost them and allow them to plan accordingly. So if we go into our payroll now, and if we finalise up to our pay period, our staging date, you'll see these on-screen flags and alerts appear, and these notify you that you have auto-enrolment duties to perform. So once you reach your staging date, BrightPay will automatically assess your employees and determine whether they're eligible job holders, non-eligible job holders, or entitled workers. So clicking into an eligible job holder, we see here the options are to enrol in a qualifying scheme, to postpone, or to mark as exempt. So I'll just enrol this employee here. You simply choose the scheme you wish to enrol them into, choose the tax relief, and click continue, and that's the employee enrolled. BrightPay will automatically prepare the employee's enrolment letter, and this letter is ready for printing, exporting to PDF or emailing. So if I go into print preview, you'll see the letter is customized to the individual employee with their staging date, their contribution rates, their option to opt out, and general information about how auto-enrolment affects the employee. So once the employee has received the letter, simply mark it as done. You'll see now the flag has disappeared because we're finished with our enrolment duties for Amy. So a non-eligible job holder, the options are different. We can print or export the right to opt-in letter, opt in to a qualifying scheme, postpone or mark as exempt. And an entitled worker then is slightly different in that it's the right to join letter and they've the right to join a pension scheme. So a useful feature in BrightPay is the option to process more than one employee at the same time. So you'll see here when enrolling one employee, choose a scheme, you can enroll multiple employees with these settings. So I'll tick each of those there. And that's all 3 of those employees enrolled. So BrightPay can also batch prepare the enrolment letters, and these can be printed, exported to PDF or emailed to multiple employees all at the same time, and again marked as done. Batch processing is also available for postponement. So if I click in here to postpone an employee, choose the deferral date, and again postpone assessment for multiple employees. So I'll just tick each of those there. And again, the letter can be done for multiple employees at the same time and marked as done. So now that all our flags have disappeared here, we can see that the employer and employee contributions are showing up on the live calculation of the employee's payslip. And if we finalise the payslips and go into print preview, you'll see the pension contributions are also shown up on the employee's payslip. So BrightPay can also prepare the enrolment and contribution files. So if we go into the enrolment summary here, okay. Again, this is how the Nest API will work. So simply send enrolment submissions. Fill out each of the following screens. So I'll just say direct debit here. Got it all. And again, all you have to do is click send now. So I'll just wait here. It'll take a few seconds, and there the submission has been successful. So again, the contribution summary or the contribution file works in a similar manner. You choose the pay period you wish to send the contributions file for, send submission, due date, and again send now. So as Paul mentioned, that's how the API works, and with Smart Pensions there will be something similar to that where it's just a click of a button and the enrolment and contribution files are sent. So if an employee decides to opt out, we can go to the Employees tab, simply click Opt Out and enter the opt-out reference as received from the pension provider. So if we go back to our payroll now and into the next pay period, we see that the employee has a refund of the pension contributions made to date. So that completes the short demo for today. So just before I pass you back to Paul, I'll quickly go through the pricing of BrightPay. And the Bureau license includes unlimited employers, unlimited employees, free phone and email support, and auto-enrolment functionality for just £199 plus VAT per tax year. We also have a 50% discount at the moment for new customers who switch from a different payroll software provider. So I'll now pass you back to Paul here.
Thank you for that, Rachel. Just one other point I just wanted to make as well about the pre-assessment report, or the pre-staging assessment, or whatever it's called. Another useful feature of that for an accountancy practice or a bureau provider is to be able to send it to your client to not just to establish how much auto-enrollment is actually going to cost them, but it also would indicate whether there are actually any eligible job holders. Because most recent guidance from the pensions regulator is that if there are no eligible job holders, that you don't actually need to register with a pension scheme. So, it cut down some of the administration, I suppose, in those cases. So just getting back to my own presentation here. So, okay, summary of the essential questions just to ask your payroll software provider in relation to auto-enrolment. So whether you're speaking to your existing software provider or selecting new software, you should ask if the system can it assess your workforce, can it allow the use of postponement, can it automate employee communications, can it calculate the pension contributions, including the various different types of tax relief that are used, can it handle opt-ins and joining, can it handle opt-outs and refunds, and can it notify you when actions need to be taken, and keep records and provide reports, and can it integrate with some or all pension provider systems. So that completes my part of today's webinar, and I'm delighted now to pass you over to Griselda Williams from Smart Pension, who will present how to choose a quality scheme and not get lost trying to navigate the auto-enrolment jungle. So if you have any questions regarding my part of today's webinar, please send them through now so that we can get through as many questions as possible afterwards. So thank you, and I'll pass you over to Griselda. Thank you, Griselda.
Thank you, Paul. I think we're almost set up here.
We can hear you anyway.
Can you hear me? Can you see my screen?
Yeah, perfect.
Great. Excellent. I think we've ended up at the back of it. Let's start from the very beginning. Okay, well, thank you very, very much indeed for inviting me to come and speak on your webinar today. It's a great pleasure to be here and to be representing Smart Pension, who are an auto-enrolment workplace pension scheme, who qualify for auto-enrolment. And I'm here today to talk to you about a number of matters, but specifically how you navigate this auto-enrolment jungle. Because at the moment it looks like this picture, a bit dark, a bit confusing, and a little bit scary and tricky to navigate. So I want to talk to you about the issues that you might be confronted by and might be sort of really phasing you. The topic of giving advice and recommendations, I think, is particularly important for accountants and other advisors with regard to auto-enrolment. How to go about choosing a suitable scheme. There are a number of options out there, and too many options, and it can be quite confusing about who's most appropriate to go with. So I'm going to give you some tips on what to look for and what questions to ask, and then obviously talk about Smart Pension and how we can help you with auto-enrolment. One of the big topics is the fact that we've got 1.9 million employers are going to be staging between now and the end of 2018, and this is a massive volume, and there's a lot of concern about the issue of capacity crunch. Are there enough systems and processes and schemes in place to be able to cope with the volume of numbers we're going to be seeing over the next 2 years? I'll talk further about how Smart Pension has designed itself to cope with volume, but in particular I just want to mention at this point that we're using a pensions administrator who can process up to 65,000 transactions a day. So we have chosen them specifically to cope with the volumes that all schemes are going to be facing and all of their platforms are going to be tested by going forward. And one of the things that's extremely important with regard to these volumes is that the sooner you get set up with a scheme in advance of your staging date, the easier it is going to be and the more support that you will get from pension scheme providers, because once they're dealing with 200 to 500 sign-ups a day, which are the sort of volumes we're looking at, they won't be able to give you the hand-holding that you might require. So try and set yourself up as far in advance as possible in order to get as much support as you can when setting up for auto-enrolment. The employers are faced with statutory obligations. These include providing employers with information on auto-enrolment, automatically enrolling all eligible workers, and as Paul did correctly mention, if you don't have any eligible workers, you don't actually have to set up a pension scheme. However, if your non-eligible or your entitled workers ask to be enrolled, then you do need to set up a scheme. You need to put, exactly as I said, non-eligible workers who want to opt into the scheme, and you have to manage all the opt-outs. Submit a declaration of compliance, automatically re-enroll eligible workers every 3 years, keep records for 6 years, and of course you must not induce opt-outs or operate discriminatory recruitment processes when employing people with regard to auto-enrolment. So these are sort of the obligations that all employers are facing at the moment, and Paul went in great detail in his presentation about all the elements involved with auto-enrolment. So thank you, Paul, for doing that job for me. So I won't go into any detail here because it's been covered for you already. You're faced with complex regulation and jargon. I'm not going to go through all these terms that are on this page, but it's designed to look complicated and it sounds complicated, and systems like BrightPay's payroll software and Smart Pensions pensions administration platform have been designed to help you navigate all of this complexity as simply and straightforwardly as possible to reduce the administrative headache for you and to make auto-enrolment an easy day-to-day process that isn't going to give you a migraine. We're being faced with penalties for non-compliance. Whistleblowing is on the rise. The pensions regulator can issue penalty notices to punish persistent and deliberate non-compliance. These include a fixed penalty notice of £400. It can be escalated up to a daily fine of £50 to £10,000, depending on the number of staff you have. And there's even a civil penalty for cases where you fail to pay contributions due, with a financial penalty of up to £5,000 for individuals or up to £50,000 for organisations. And it can even become a criminal offence if the pensions regulator thinks that you are not being deliberately non-compliant. So it's really, really important that people are aware of their staging date, and even if they've missed it, make sure that they get themselves auto-enrolled so that they don't get hit with these penalties and fines that are looming. Similarly, the pensions regulator is warning about pension scams, saying don't get stung. And they've released guides to help you spot common tactics and help you do proper due diligence to understand what a quality pension, workplace pension scheme looks like, so that you can avoid being hit by people who are going to whisk your money away to another country or into a fraudulent scheme, and you've got to be aware that they're out there. The pensions regulator has a report that you can find at this link to give you that level of detail, so you can make sure that you're covered and that you're choosing the right scheme to join. Costs. You're faced with a lot of possible costs. Not only have you got the employer and employee contribution costs, and the cost for the employers are 1%, 2% and 3% respectively from March 2018, March 2019 and April 2019 onwards. But in addition to that, there are a number of other charges, particularly relating directly to pension schemes. So there are possible member charges. So on top of the annual member charge, Nest, for example, have an additional 1.8% contribution charge. Creative Pension have a £2 per month on top of their annual member charge. And Rolex have between 60 pence to £2 per month in addition to their AMC. There are sign-up and admin fees. The People's Pension have recently introduced a £500 sign-up fee. Now have introduced a up to £40 a month administration fee. Standard Life £100. Trust Pension £12 a month if you're going to use their assessment and communication service. Legacy schemes are even turning employers away if they don't reach minimum contribution levels. At Smart Pensions, we have been very concerned about all of this and have actually gone ahead and created a guaranteed acceptance scheme that is free for advisors and employers to use, and our annual member charge is 0.75%, which comes in line with the regulatory requirements that it doesn't, the cap, so it doesn't exceed 0.75%. So have you got a migraine yet? Are you stressed? A lot of people are really, really concerned and worried about what an auto-enrolment means for them in terms of the costs, in terms of the administration, in terms of the regulation, the jargon, the process. It is a headache. So why should advisors and employers care? Well, most people stick their fingers in their ears, shut their eyes, and just think of a box of pretty kittens when faced with the topic of auto-enrolment. When I speak to SMEs, they are sitting there with their head in the sand. In fact, over Christmas, I met a friend whose business had been hit by a £40,000 charge because 2 of his companies had failed to stage in time and had missed all their deadlines, and they finally spoke to the pensions regulator who guided them through the process and sorted them out. So even though we think we're on top of it, and you are coming to this webinar to learn about auto-enrolment, there's a lot of people out there who just are simply unaware of their responsibilities going forward. It is a legal responsibility for auto-enrolment, and it sits with the employers. This responsibility sits with the employers primarily. It's mandatory for eligible workers to be auto-enrolled. 2/3 of SMEs don't know their staging date, as I just said. And it's good for business, for advisors and employers to care, because advisors can win clients if they're engaged in auto-enrolment, and employers can attract better talent, because auto-enrolment is apparently considered the second most valuable employee benefit by employees. This was in a DWP report that came out recently. So what can you do? Well, advisors can help their clients by writing, emailing and calling them to let them know their staging date is approaching. And similarly, advisors and employers can manage the auto-enrolment administration very easily using both BrightPay's payroll software and Smart Pensions' intuitive pensions administration platform. Before I talk about the administration platform at Smart Pension, I wanted to talk about advice. A lot of accountants and payroll companies are not engaging directly with clients on automatic enrolment. They're concerned that recommending a particular pension scheme might constitute giving financial advice. In these cases, many accountants are either directing their clients to a financial advisor, which could be costly for their clients, or they're avoiding auto-enrolment altogether and therefore losing clients to competitors who are engaged. The Institute of Chartered Accountants in England and Wales, ICAEW, has produced a personal finance planning traffic light guide to regulation. And they've got a chapter specifically about auto-enrolment. I've included the link at the bottom of this page, so you can find the full guide for yourself. It comes as a PDF document. But I'm going to take you through 3 elements, the green, red and amber elements of auto-enrolment specifically given by ICAEW. Activities that are not regulated, and you have the full green light to go ahead, are discussions with employers on the relative merits of an auto-enrolment compliant pension scheme. The really important one here is that recommending a specific pension scheme to employers and carrying out that transaction does not constitute giving regulated advice. General discussions with employees on the different types of pension products available is perfectly fine, as is providing the employee with the name and contact details of an appropriately authorised firm. You can't pass those client details on to the advisor, which is capable of providing financial advice and which will meet the client's needs. So this is really, really important. Accountants are concerned that by directing the client to a specific scheme, it comes as regulated advice. It is not regulated, and you can do it. What is regulated advice and comes with an amber warning, and the ICAEW has something called a DPB license, which is an equivalent to an FCA, a sort of equivalent to an FCA regulatory qualification, is that passing clients' details to an appropriately authorised firm with client's consent for the advisor to contact the client, explaining and evaluating advice given by an appropriately authorised firm and identifying whether this is suitable or not, but not giving alternative advice, implementing investment planning in cooperation with an appropriately authorised firm and arranging to make payments into or to place property into a personal pension scheme, including a self-invested pension scheme at the request of a client, but not recommending the acquisition of any rights in such a scheme, all comes under the amber bracket and is regulated advice. And finally, again, what is absolutely regulated advice and requires FCA authorization are discussions with an employee on the relative merits and suitability of a specific pensions contract, particularly for a self-invested personal pension, and recommending that an employee purchase a specific personal pension contract. Now, this does not necessarily relate to auto-enrolment, but I think it's very important that accountants and advisors out there are aware of where what freedom they have to give recommendations and versus where it becomes regulated advice. So please do go and look up the ICAW guide and for yourselves and refer back to the ICAW for advice. I wanted to make you aware that this is available. So moving on, choosing a scheme, this is the real core of this conversation. The TPR, the pensions regulator, brought out a report last year suggesting 7 questions that you should ask when considering which scheme to use. The first question is it a quality scheme? Does it meet the requirements? Is it qualifying? Which scheme is compatible with your payroll and accounting software? As we talked earlier, and Paul was talking about the BrightPay software, a number of schemes have incorporated themselves with the BrightPay payroll software auto-enrolment technology, and there is a button there that you can press to send your contributions data via an API to the pension scheme. Smart Pension is going to be integrated with BrightPay very shortly. We're hoping by the end of this month, if not slightly beyond that, but very, very soon, so that anyone using the BrightPay payroll software will be able to invest and sign up with the Smart Pension workplace pension scheme going forward. Which scheme will provide you value for money? Well, I already went through a slide very quickly about all the hazards that you can face in terms of the charges that a number of the different schemes are putting out there, whether it's the member charges, whether it's the admin charges, or whether it's just schemes just turning people away. Also, which scheme is going to help you with all the different elements of auto-enrolment? Now, there's a debate whether or not pension schemes should be providing services to do assessment and communication for you. And as we've seen, payroll software companies such as BrightPay have created fantastic capability and services to do the assessment of your employees and also the communications with your employees. Smart Pension also has that capability, and it offers it for free as an option. So some people can use our workplace pension scheme administration platform and assess and calculate contributions and communicate with their employees using our own platform, but we'll also accept pre-assessed contribution files, either in a CSV format or via API, which means that your own software can do the assessment and contributions calculations and just send us the contributions data and the funds into the scheme. What are your investment options is another important question. It's really important to understand that whilst you have complied by enrolling with an auto-enrolment pension scheme, the benefit is ultimately for your employees, and it's important that you know and that they know where their funds are being invested. Are they going into target date funds with Nest? Are they going into lifestyling funds, such as our own with Legal and General? But it's really important that you find this information out so you know where that money is being invested into a legitimate, respected, stable, and well-known, renowned investment fund. And there might even be a range of funds available, including Sharia funds, ethical funds, or other alternatives. So it's really important that you check to see what that pension provider is offering in terms of their investment and who the pension provider is behind it. I talked about who's providing the assessment of compliant communications in terms of the compatibility of your payroll and accounting software. It's really important that you check who is doing it. Is your software doing it? Is your pension provider doing it? And as long as you know who is and you've allocated that responsibility to either the pension provider themselves or your payroll software, then at least you know that the assessment and compliant communications are being adhered to because they are part of the statutory obligations and must be fulfilled. So what does a quality pension scheme look like? Well, a quality pension scheme should provide a fast, efficient and hassle-free sign-up process. It shouldn't involve endless paperwork, lots of postal delays, multiple signatures, and take you several weeks to sign up. It should be done in a matter of minutes, online, very easily. Assessment, contribution calculations and communications should be handled automatically and for free. We believe that very, very strongly. Some schemes require additional charges for this service, and we believe it should be part of the offering and optional if your own software is doing the assessment and contributions calculation and communication for you. The scheme should be affordable to both the employer and the employee, preferably free to the employer and the advisor, and the employees should really only be having to pay the annual membership charge and no additional administration fees on top of that, but different schemes have different policies. If a scheme is run by a master trust, this master trust should be registered with the HMRC and regulated by the pensions regulator. The fund administrators and managers should be registered with the FCA. And it's really good if your scheme has got an excellent de facto rating and also a MAF accreditation. Now, MAF accreditation can take several months and is very costly for master trusts to go through. MAF stands for Master Trust Assurance Framework, and the pensions regulator recommends schemes who have this MAF accreditation. So if your scheme you're looking at doesn't have it, it is worth asking them if they're in the process of being audited for it, because they might deliver in a month or two. Smart Pensions is currently going through its own MAF audit and is hoping to announce its MAF status in the coming months of this quarter. Right, now we're going to focus on Smart Pension itself. Smart Pension offers two platforms to help you through auto-enrolment. We have an employer platform which allows employers to sign themselves up directly to the scheme in minutes, manage their full auto-enrolment obligations themselves, and our service includes assessment, contributions and communications. If your software already does this for you, as BrightPay payroll software does, we also accept pre-assessed data files, as I've already mentioned. This platform is particularly helpful for smaller employers who don't use additional third-party resources to support their auto-enrolment compliance obligations. But I think the platform that's going to be of particular interest for most of you today is our advisor platform. Our advisor platform has been designed for accountants and bookkeepers, payroll, HR, financial advisors and other advisors to manage a portfolio of their clients through auto-enrolment. The dashboard page looks like this image here on the right-hand side. You can update the advisor, put your own advisor details in. You can have as many users within the advisor company as you like. So if the advisor company has 10 employees managing their own portfolio of clients, each of those employees will be put under users. And the companies themselves, your clients, you then register under the companies section. If you're going to use our advisor dashboard, you can sign your clients up and leave them to manage their own administration. You can manage their pensions administration for them all the way through, and you can manage the ongoing assessment and communications for them if their payroll software doesn't already do that for them. That's optional. I think at this point I might actually like to take you onto our advisor platform just to give you an idea of what it looks like, because it's quite interesting to see. This is the image you just saw on the slide, and I am just going to go into the company section and just show you, this is the number of companies I've set up as dummy companies, and show you what the back end of our administration system looks like. And this back end is the same for the employer platform and the advisor platform. You can see here you have a dashboard which takes you through all the tasks that you have to go through. You have to sign a participation agreement. In this case, it's already been completed. You can set up a company direct debit. You can update key company information. You can confirm your company staging date. We require the director of a company to provide a proof of identity. We think this is very, very important, particularly for anti-money laundering regulation. And then you can add your employees for each company. You can upload them in bulk, or you can upload them individually and edit them individually. You can also set up your director's profile. You can see the documents that have been signed. So here's the signed participation agreement. and the master trust, the details of the master trust agreement. You can see a list of all your employees. I've put 2 employees in here, and you can see the contribution rate they've been set, and you can assign them a role. One might be the signatory, that's the director. You might give one a role as an administrator, so they might work on different elements of the payroll data or the employee data on that system. It gives them specific access to this back-end system. You can add new employees, and you can bulk create employees. You can upload employee data in bulk. We can also manage the account administration. I talked about the different people you can give different administration rights to. We can create payments and direct debits. So we offer assessment of your employees and calculate the contributions, and we will take a direct debit payment into the pension scheme. However, for payroll software that does it for you, such as BrightPay, we will also accept pre-assessed contributions. So we will take a file, either a CSV file or directly via API, and take the pre-assessed contributions into the pension scheme and keep that data. You'll be able to see here that we have a full payroll history available. You can see any employees who have requested to opt in, and then the members themselves can manage their own details. They can manage their own pension scheme, they can adjust their additional voluntary contributions, and they can choose to opt out. So these are a number of the functionalities available on our advisor and employer administration platform. I won't go into any more detail because today we're running out of time, but that will just give you a sense of how easy it is to use, and the functionality is particularly intuitive. So going through it in more detail, for uploading employee payroll data, you can do it individually or in bulk. Payroll can delete incorrect data uploads and correct them prior to making contributions payments. That's if you're using our system to do the assessment. We can adjust calendar pay periods and set them to suit your chosen pay period dates, beginning and end. This is particularly useful for companies who might have missed their staging date and need to upload historical data to bring their pension scheme up to date. Advisors can use the platform to manage assessment communications, as I've said, or simply upload pre-assessed contributions data. And we accept data in CSV file format, Excel file format, and also in an API format that speaks directly to your payroll software. This is a little bit more detail about the assessment and contributions communications capability that we have. Again, it is optional. We also allow you to keep groups of workers, keep records, and run reports. So all our historical data is maintained within our platform. I know that the BrightPay payroll software will also maintain historical records, so you'll have 2 reference points to recover historical records if need be. As I mentioned, on our member portal, members can monitor and manage their own pension scheme, they can update their contact details, and they can choose to adjust their additional voluntary contributions as a percentage rather than a cash value at the moment. They can also choose to opt out or leave the scheme. And this information feeds directly into the employer advisor dashboard, so that all and any adjustments to the assessment and calculations can be made at each payroll period conveniently and easily. You can manage postponement on this platform, postponement for the staging date, postponement for the employment date for probation periods, and also on the occasion of a spike in earnings for a non-eligible job holder or entitled worker who might have one particular month where they pipped over the eligible job holder threshold. Transferring in and transferring out is very important. We accept transfers in from and out to like-for-like qualifying auto-enrolment workplace pension schemes. If anybody wants to transfer in from another type of scheme, we'd require a closer review, and it may involve you needing to get prepaid advice or paid advice from a professional FCA-regulated investment advisor. So we check each situation on an individual basis if it's not coming in or going out to a like-for-like auto-enrolment pension scheme. Now, just to give you a sense of our governance, Smart Pension Master Trust is managed by independent professional trustees, Capital Cranfield, to ensure good governance and serve the interests of the beneficiaries, the members of the scheme. The default fund is currently managed by Lewis Capital Management and invested in Legal and General Investment Management funds. We are currently in conversation with a number of other major asset managers to provide a greater range of investment options, and we'll be making an announcement about this by the end of this quarter, we hope. And as I mentioned at the very beginning, we've engaged the world's largest independent fund administrator, Apex Fund Services, to securely administer the workplace pension scheme. We chose them because they have the capacity to manage 65,000 daily transactions and are ideally positioned to cope with the exceedingly high volumes they're anticipating over the coming months, as I mentioned in that very first Fast Crunch slide. Two really important areas here are providing support and guidance. Given the volume of employers signing up over the next 2 years, 18 months to 2 years, the ability for schemes to provide support and guidance to every employer signing up is going to become more and more difficult, because a nice 1 hour phone call or even a half an hour phone call is just going to become harder and harder given the number of employers signing up on a daily basis over the next 2 years. So Smart Pension have created a very online and automated system which allows us to provide this service to employers and advisors for free. We've got a live chat support team on our website. We also have a support telephone line if you need to talk to somebody directly. We also have a knowledge bank on our website, and this knowledge bank will include video guides of how to use the administration platform, advice on auto-enrolment, and any other useful videos and guides to help you through auto-enrolment. We also have a number of useful tools. We think we're a bit of a Swiss Army knife. We've got an auto-enrolment planner. BrightPay also have an auto-enrolment planner. This is an extremely useful tool, whoever you choose to use. We have a pension calculator, and we also have an educational video generator that you can tailor with your own branding and send to your clients. It looks initially like this on our page. This will allow you to brand this video and give it to all of your employees so that they can learn about auto-enrolment, and if you've chosen to become a Smart Pension, talk about a Smart Pension in some detail. It's part of the employer's obligation to provide educational information to their employees. So this is an extremely useful tool to help you with that process. So to really summarise, Smart Pension is all about simplicity. Our platform and our pension scheme is very fast and easy to sign up to. It will take less than 30 minutes to sign up a company of roughly 15 employees, assess and communicate with them. It actually takes less time than that. When you're using it for the first time, it always takes a little bit longer. Security, we are secure. Security is very, very high on our agenda. Not only do we do security checks on the directors of the companies themselves, but our technology platform is constantly being updated with cybersecurity software to make sure that it doesn't get targeted. And free. Free is probably the most important thing. We think value for money is really, really important, so we provide this platform for free for both employers and advisors. And the only people being charged are the members with their 0.75% annual member charge. So we hope that with this information about advice from the ICAW and using the BrightPay payroll software platform and Smart Pensions administration platform and pension scheme, that you will be able to navigate this auto-enrolment jungle really, really easily, and that it's not a daunting and scary and terrifying process that is causing you to worry, have sleepless nights and have a migraine. I've been Griselda Williams from Smart Pension. I'd also like to introduce my co-director, Matt Castle, who's just going to pop his head around the camera and say hello. And we are both available to give advice and support for anybody interested in using Smart Pension, and please feel free to contact us. We've got our email addresses right here. That's it from us. Thank you very much indeed. And if you've got any questions, we'd be delighted to hear from you.
Thanks a million, Griselda. That was really informative, and we had a lot of questions coming through there, so it just shows how much people are interested in what you were talking about and how engaged the audience were. So just before we take the Q&A, just a quick recap. So if anybody would like to book a demo, we'll send through this link of BrightPay where you can book a demo directly. We also have a number of free automatic enrolment guides available specifically for bureaus. We also have a number of free auto-enrollment webinars for the rest of 2016 coming up, and we're running a number of paid CPD accredited webinars as well in 2016. Our next webinar is on the 16th of February at 11 a.m. and this is our CPD accredited webinar, and you get 2 CPD points for this, and again the link is, or two CPD hours, sorry, excuse me. There's just a couple of statistics from BrightPay from a recent customer survey. BrightPay is accredited by, or is the preferred payroll supplier for tax assist accountants, and we're also accredited by the Institute of Certified Bookkeepers. So now we'll take the questions. So as I mentioned, there is quite a lot of questions coming through, and we will send a recording of this presentation to everybody after the webinar, so you'll have an opportunity to, I suppose, to listen to all of the points there that was covered by Paul and Griselda. There was a lot of information covered, so we do understand that, and we'll send on everybody's contact details. So if you did have any specific questions for BrightPay, you can email us or call us, and the same for Smart Pension. Okay, so I'm just going to, so there's just a couple of questions. The first few questions came in relation to the Nest API when Rachel was covering the BrightPay demo. So the first question is, so you send 2 files every month?
I think every pay period. You don't actually send 2 files. One file is an enrollment file and the other file is a contribution file. So at staging, everybody needs to be enrolled unless you use postponement. Sorry, did it sound okay, is it? Yeah, okay. Sorry. You only need to send the enrollment file if you're actually enrolling an employee for the first time. After that, if there's no enrollments, it'll just be a contribution file every pay period.
Okay. Thank you. And then again, this one is in relation to the Nest API. So what was the due date you entered on the contribution submission? Was it different to the pay day?
Yeah, that's the date that you actually pay the contribution usually by direct debit. You would have set that up when you were setting up as an employer within Nest. You would set the date each month that the direct debit is due to hit. I think it's usually the 21st or 22nd is the latest date you can specify. I'm not sure which one of those, 21st or 22nd anyway.
Okay.
But it's important that you use the same date on both platforms, if you know what I mean, that BrightPay has the exact same date that you've used in setting up your Nest profile. Otherwise, it will create an error on submitting the file.
Okay, I suppose that brings us just to the next question there. When sending to Nest API, what happens if there is an error? How do I handle that?
Well, basically, the error will show the details of why it has created the error. And I actually believe, I was just talking to our developer earlier on, he said actually the text that comes through from Nest on the error report is actually quite self-explanatory, which hopefully means we won't get the call then. We won't get a support call as a result of it. So they usually know from the error text what they need to do to correct the error. And it could be something as simple as not having the same due date for payment for the actual contributions.
Okay, so salary sacrifice, does the software deal with the gross before or after? And then it says 2% say, is that employers?
Employers and employees.
Yeah, 2% say employers and employees based on what?
Okay, I always have to get my head straight when I'm talking about salary sacrifice. We do actually have the facility to handle salary sacrifice, and we allow the user to choose whether the salary sacrifice is deducted first before calculating the employer's contribution, or if they don't take it, the employer's contribution will be calculated on the gross before the salary sacrifice. Is that clear?
Yeah, I think so. Griselda, did you have anything to add on the salary sacrifice with Smart Pension?
Yes, I mentioned obviously that Smart Pension has its own capability of doing assessment and communication, but that system at the moment only assesses on the basis of qualifying earnings. So the benefit of using your auto-enrolment capability and your assessment capability means that people can do the full salary sacrifice and or assessment of earnings based on different qualifying earnings on your system, and then we'll just accept those pre-assessed files coming via the API direct from you once that's set up.
Okay.
Okay, good.
Great. And don't worry, Griselda, I'm coming to you with a lot of questions. I'm just trying to work through the list here. Okay, so another one just for Paul. Does BrightPay import information from other payroll programs?
Yes, that's something that it does at the moment, and we're working on extending the number of payroll packages that we allow sort of automatic import from. So yeah, the main providers out there, we do actually provide the import functionality.
Okay. Now this was covered in the webinar, but I'll just ask it again just to go over it because it is quite a popular question. I assume if a company already has a pension scheme, then there is no need to register for auto-enrolment.
I think I'll let you take that one, Griselda.
I'm not going to go into detail here. That's one for the TPR to check with them. But if your company has a pension scheme, you need to check that it is a qualifying pension scheme under the terms of what the pensions regulator consider a qualifying pension scheme. So your scheme might be in place, but it might not be qualified. So you need to go to the pensions regulator and check with them that your scheme does qualify. If it does, you don't have to set up another one. If it doesn't qualify, you will have to set up an additional auto-enrollment scheme and auto-enroll all your eligible job holders.
I was actually just talking to one of the people from the regulator recently, and their opinion that most existing pension schemes will not be qualifying pension schemes for automatic enrolment. So.
Okay. So the next question, I suppose, again, would be for both of you. It's the one director company. If we have a one director company earning 10K per year with staff all earning less than 10K, do we have to inform anyone that we are not going to be operating a scheme?
Well, okay. One director company there with other employees, as far as I'm aware, that will require registration with a pension scheme. Auto enrolment does apply to that particular case. I think unless the director doesn't have a contract. Griselda, now again, this is one of the...
Can I help you here? Okay, if you have a company with one or two directors, and there are only directors, and there are no employees, they are exempt, unless they have a payroll for themselves, then there's a question mark, but essentially they're exempt. If they have employees, it doesn't matter if there's one director or 10 directors, if there are a number of employees, those employees will need to be...
Sorry, Griselda. Sorry, there's a time, and it also doesn't matter what those employees are earning.
But they must be assessed, and then if one of them, which includes the director, is eligible, then they will have to set it up because there's more than one employee. However, if none of them are eligible job holders, they don't have to set it up unless, as we mentioned before, any one of those employees asked to be enrolled, in which case that director will have to set up a scheme for any of the employees who want to opt in. Is that clear?
Yeah.
Okay. So this one here is for you, Griselda. The annual member charge for Smart Pension is 0.75% of what?
That's of the members' pot.
Members' pot. Okay.
Yeah. So say there's £100 in the members' pot, it'll be charged 0.75% of that per annum, 75 pence I think it is, per annum of the £100. And that's the maximum charge that any auto-enrolment scheme can charge a member's pot. It's like the fund management charge.
Mm-hmm. Okay. Okay, so somebody is just looking for the links shown in the Smart Pension presentation. So as I said, we'll send on a recording of today's webinar along with the PowerPoint with all of the relevant links for both BrightPay and Smart Pension. Let me see. Okay, so another question for yourself, Griselda. Do you have a wide range of investment funds?
As I mentioned, at the moment, we have a number of funds. The default fund invests in a number of legal and general funds, but we are in discussions with a couple of asset management companies about increasing the range of funds we have available. So at the moment, we just have the main L&G suite of funds, but we're going to be broadening that in the next couple of months, and we'll make an announcement to that effect. So we will be looking to add Sharia eligible and maybe a range of other slightly different asset class funds, higher risk, lower risk, as additional alternatives. They're not there yet.
Okay, thank you. Okay, the next question is, it's a big question. How can we profit by offering auto enrolment? I suppose every bureau wants to know the answer to this question. We do have a number of guides on how to profit from auto enrolment and offering it as a chargeable service to your clients. We'll also be running a webinar on the 24th of March where we'll be discussing some pricing strategies and some practical tips on how to engage with your client and talk to them about auto enrolment and make them understand, they're offering it as a chargeable service. So a lot of the guides that we have as well online, a lot of the links that are there, there's a lot of reading there. So if you wanted to get your teeth stuck into that.
Can I add to that one as well, Karen?
Mm-hmm.
If you use the Smart Pension Advisor platform, any of the advisors out there, we offer that platform to you for free. So you can charge what you like to your clients for servicing and providing support and advice, and you won't have any margin issues because we're not going to be charging you for the use of our platform.
Okay, great. Okay, this is a bit of a long-winded one. So I believe a client currently has their payroll run by another payroll bureau. Over the next 24 months, it's likely that they may take the payroll back in-house. If they choose BrightPay, can they simply back up and restore from accountants to in-house, given now all of the history and not just payroll, but also pension data and correspondence?
Yeah, the BrightPay employer file is a single file, very much like an Excel file or a Word file. Once that file is sent by email or whatever to the other recipient, to the client themselves, all they need to do is simply open that up in their BrightPay payroll software and they have everything.
Okay. Okay, another question for yourself, Griselda. Does Smart Pension link to the HMRC payroll software?
I can answer that one if you want. A HMRC payroll software doesn't link to anything. It doesn't produce anything in terms of pension reports whatsoever. So, if anybody's using that, try and get away from it and use proper payroll software because you'll save a heap load of time.
However,
okay.
We have accommodated that one. Smart Pension set it up originally to be able to facilitate employees who couldn't. Our employee platform, rather than the advisor platform, was set up to scoop up those employers who can't afford any payroll software or aren't paying for that and are maybe using the HMRC software. So we will actually accept an Excel template. We have an Excel template. You could put the information manually from your HMRC software into our Excel spreadsheet, not even a CSV file, and upload that, and we will accept that data. So we can help there. Although, as you say, if they can go to a proper payroll software, that's a much better plan.
Yeah, I think even just the API alone and the time saving you're going to have in that, okay, with our software is £89. I know there's other software that's comparable out there in price. Some are even lower. If you have 1 employee, 2 employees, even 3 employees, £89 is nothing really to basically save you maybe 2 hours pay period, and also the capability of actually getting things wrong when you're doing things so manually is very much increased. And also the HMRC Basic Pay UI toolkit doesn't produce pay slips, and that's one of the things you're meant to actually give your employees, showing the proper pension contributions and aid deductions and whatever. So it's to me it's a no-brainer. Just get away from the free software or get away from the HMRC software.
Yeah. On that link that we sent through, that we have a number of guides talking about what the pensions regulator are doing for HMRC users, and in terms of the limitations when it comes to automatic enrolment and processing things manually. So again, there's a lot of information there. Okay, so the next question. Most of my clients are staging in 2017. How can I auto-enroll in advance?
Well, you would have to apply to the pensions regulator to move your staging date forward. And I'd question why you'd want to do that. Have you come across that many employers want to do that, Griselda?
Well, actually, I have. In my previous role, we had a couple of companies who approached because they wanted to, we call it pre-staging, set up a scheme well in advance of their staging date, because they just wanted to set up a pension scheme for their employees and get on with it. And you can do that. You can start paying in. But you still have to, on your official staging date, assess and comply with auto-enrolment regulation, because you're not under auto-enrolment regulation until your staging date. You can set up a pension scheme using an auto-enrolment qualifying scheme in advance of your staging date. So it is possible. You still then, on your staging date, have to do the official assessment, make your declaration of compliance, etc. on your staging date.
But you can actually apply to the pensions regulator to have your staging date moved forward as well.
That as well. You can do that as well.
Yeah.
Okay. So I know we're kind of gone over time, but there's just a few more questions, and there's still a lot of people listening. So I'm just going to move forward with the rest of the questions. So the next question again for Griselda. I use Nest for clients. How do I transfer to Smart Pension?
Very easily. There are 2 steps. First of all, just stop making contributions and using the Nest platform, and start using Smart Pensions from today. You can do that very easily. If you're an employer, use our employer platform. If you're an advisor with clients, go onto our advisor platform, upload your clients, upload their employee details, and you can go from there. And the second stage will be to contact us to request to transfer the funds across, or you can't transfer out of Nest. Unfortunately, any funds that have been put into Nest to date have to stay in Nest. So you'll just have to start with us from scratch. So the first of the next month, start making contributions and setting up with Smart Pension instead of Nest. That's the simplest thing to do. I believe in the future, there's no specific date, Nest may well make those funds available to be transferred out, but it's not happened yet. So if you've used Nest, any funds that are in there stay there, and you just start again with a new scheme from whenever you'd like to start. And send me an email, and I'm happy to talk to you about it further after the call.
Okay, great. So how well does both BrightPay and Smart Pension integrate with bookkeeping software such as QuickBooks?
Okay, well, with BrightPay, in our sort of our report writer, where people can actually design their own reports, they can specify the fields and the columns and the rows that they want to include in that, and then export as CSV file or whatever format QuickBooks would require. There is no specific link, that we have for QuickBooks or indeed any other accounting package, but the users themselves can define whatever they need, whatever information they need from the payroll software. I don't know about the Smart Pension side of that.
Okay, well, there's 2 sides of it, and I don't know QuickBooks myself personally in any detail. If it doesn't do payroll software and it's just doing the accounting software, you have to run the payroll, whatever system they're using, if they have their own payroll. However, we can Smart Pensions offers two services. If you're using a payroll software company such as BrightPay, who will do the assessment and communications for you, we accept the pre-assessed data via an API or a CSV file in a practice format. But if you want us to do the assessment and communications for you, all you have to do is upload your employee payroll data each month or each pay period, and we will do the assessment, contributions calculation, and communication for you. So you've got both options. But as I mentioned earlier, we will only assess on a qualifying earnings basis. If you want to assess your employees under any of the other banded unbanded earnings, then you might want to use a payroll software system such as BrightPay that will allow you to do that, and then we'll accept the assessed contributions. So you've got two options with us. We can do the assessment and contributions for you and just accept the payroll data, or we'll accept the pre-assessed, depending on what QuickBooks will do for you.
Okay, great. Okay, I might just take another couple of questions and then we'll wrap up. And for anybody that we don't get back to, we'll get back to them either by email or give them a call. Okay. Griselda, this one is for you. Is it possible to download charges for operating pensions from your site, from your website, I think?
If I've understood the question correctly, are you trying to understand what the different charges of other schemes are, and do we have that information to share with you? We do have a table on our Why Choose Smart Pension page on our website that does give an overview on some of the other schemes and what their charges are. And as I reiterate, Smart Pension doesn't have any administration or sign-up charges. We simply have the annual member charge for the member. But yes, we can provide some information of that. It's also worth doing your due diligence if you're trying to find out more and looking at the other schemes that you're interested in just to see what they are charging, just to make sure that we're not giving you the wrong information. We can keep it up to date, but you do check for yourself.
Yeah, of course. Okay, just the last one while we're here. Where does BrightPay hold the AE records on each year, or is it brought forward every year? What happens with the information for leavers? So I suppose kind of two questions there. Well,
the information is included, is recorded within that employer file I was talking about, that you'd have a specific file for each employer. So it would have all the AE details that we mentioned in our presentation, as names and addresses of employees, when they're staged, other contributions and such like. No, it will be brought forward each year, so we would have the cumulative information from whenever auto enrollment started for those employees. Just one other question I see there I think is probably worth answering. In the case of a one director, one employee.
Oh yeah, okay, so in the case of a one director, one employee, and the employee is not eligible, how would our clients opt out?
I think it's probably important to state here that, okay, I'm assuming here it's a director and an employee. The client cannot opt out. It's only if in those situations we have one director companies, no other employees, that the client can or the employer can inform the pensions regulator that they're not actually regarded as an employer, and therefore the regulator will not expect a declaration of compliance to come out 5 months after staging date. But in that particular case, they're asking about their director plus employee. The employee is not eligible. How would they opt out? They don't opt out. They still need to go through the process of automatic enrolment. They still need to file a declaration of compliance, even if the non-eligible job holder or worker never decided to actually join a scheme or opt in.
Can I just add to that?
Yeah.
If you have a look at the pensions regulator's website, they've got some really, really useful information for this very specific type of situation. Small businesses with a single director, single employee who isn't an eligible job holder. So my recommendation would be we can give you snippets of advice, but go straight to the pensions regulator website and they will give you the definitive answer. And if in doubt further, call them or email them, and they're excellent at getting back to you. They are so efficient about getting back and providing support. And go straight to the horse's mouth if in doubt. We can give you guidance, but go straight to the horse's mouth when in doubt. While I've got the mic, my co-director Matt was absolutely brilliant on QuickBooks and found out what we needed to know. QuickBooks is owned by Iris. QuickBooks is owned by Iris. and we actually have an API with Iris. So if you're using QuickBooks and you're doing your auto-enrollment assessment using QuickBooks, then we will have an API capability to send us the information very, very easily.
Great.
Okay.
Okay, well, I think we're just going to wrap it up, and as I said, we'll send everybody on a recording of the webinar afterwards, and please do get in touch if you have any further questions. And thanks for everybody's time. Thanks a million, Griselda.
Okay,
that was very, very informative.
Thank you very much.
And thank you, Paul, and thank you, Rachel. So thanks, everybody. Have a good week.
Cheers. Bye.